Hello and welcome to Watson's Weekly. This is a quick roundup of what I think are the most important and interesting economic and commercial events of the week just gone. It was quite an exciting week, don't you think? We had more tariff stuff, arguments between the US and Iran, as well as Saudi Arabia and Canada, and some contrasting fortunes for Japan and Turkey. Retailers had some mixed news, whilst Tesla seemed to be the most talked about story this week. So, on the macro front, we had more tariff chat with the US imposing $16 billion worth of tariffs on China, and then China announcing 25% taxes on $16 billion worth of US imports later on in the week. Oil was noticeably absent from China's list as it's a major importer of US oil and would effectively be shooting itself in the foot if it taxed American oil because supply would just be diverted elsewhere in the region. Such is the demand for it at the moment. There were a lot of catfights going on this week as well, what with the US reimposing sanctions on Iran and Saudi Arabia slamming Canada, who criticised it for the arrest of an activist. I think it's unlikely anyone will publicly jump on Canada's bandwagon, given that Saudi Arabia's oil is needed to keep the oil supply steady now that Iran has been taken out of the equation. Other than that, there were contrasting fortunes for Japan, which turned to the growth track with its latest GDP numbers, and Turkey, which saw its currency, the lira, going down the toilet. The Turkish lira has been losing ground for a while now, but tensions between Turkey and the US are making the situation worse, as is the Turkish president, who is opposed to his central bank raising interest rates. Raising interest rates is the course of action that should be taken to at least slow the slide, but Erdogan is adamant that he wants them to stay low to encourage growth. Retailers had a mixed week, what with House of Fraser having its main backer drop out earlier in the week, only to be rescued by Mike Ashley's Sports Direct, which bought the company for £90 million this morning. Homebase also announced that 60 of its 249 stores are to close as part of the company voluntary agreement, details of which are likely to be announced next week. And if that wasn't enough, Topshop lost its Chinese online retailer partner, which will dent its China ambitions for the moment. On the positive side, however, IKEA announced the opening of its first store in India. There's a lot of excitement, but I suspect that India will prove to be a tricky market with wafer-thin margins. Having said that, it could present a different type of opportunity because if the company manages to find some good local suppliers, it could use the product in other countries and bump up its margins elsewhere. The other big story for this week was Tesla. Everything kicked off earlier in the week when founder Elon Musk sent out a tweet that implied he was going to take the company private. The SEC is now looking into whether he was telling the truth, and if he wasn't, he'll probably be hit with fines and lawsuits. But the board is backing him, saying that going private was discussed last week. Although Elon Musk has a bit of a love-hate relationship with investors, I think that Tesla's better off staying as it is, especially given the crucial stage it's at right now, not to mention the fact that they've generally been pretty supportive in terms of cash raising thus far. Going private would certainly make things easier in some ways, but it is not an easy route and would cost loads of money. I hope you found this roundup interesting. I publish a daily note on watsonsdaily.com, which gives you more detail on what I've just said on a daily basis. If you want to get access to this, as well as my weekly, monthly and annual publications that will help to turbo boost your commercial awareness, don't be shy, please subscribe. A subscription will cost you less than a double espresso per month. Thanks for watching. Watson, out.